to our next weekly outlook. It is the last day of the month, and now we're going into a new month. So, we can obviously expect some volatility happening in the markets. Along with that, we have a lot of fundamentals coming out, especially since the beginning of the year. So a ton of stuff happening with central banks. You have a ton of stuff happening with the UK's government as well, especially with the pressure on Boris Johnson. And then on top of that, we also have the geopolitical tensions, right? So Russia, Ukraine, you have the US kind of stepping in on sidelines, and they're telling them that, hey, if you're going to go ahead and move forward with whatever your plans are right now, expect consequences. So a ton of stuff happening macro fundamentally. And then once we get onto the economic calendar, we'll take a look at what's happening this week as well. And then we're going to go ahead and move on to the technical analysis with Stefanos.
Absolutely. Hope you guys had a great weekend. If you guys are new here, this is a weekly update that we normally do every single Monday or Sunday. And then on Wednesdays, we trade live together as well at 6:30 Eastern, 6:45 Eastern Standard Time. So if you guys want to tune in, feel free. But let's jump right into it.
Yeah, 100%. All right, so we're going to start off with the Fed first, because obviously we had some interest rate news coming out very recently, just last week. And then we have some GBP data coming out too, so GBP interest rates. And then we have a ton of other central banks releasing their monetary policies and all that type of stuff. So what we want to take a look at is, obviously we saw last week when the Fed came out with their FOMC statements and even the press conference saying that they're going to continue tapering. So we didn't just increase the interest rates just yet, but we are headed towards that direction and finally increase the interest rates in March. So right now we're finishing up that tapering, which is expected to finish by March. And then we're starting to see all the other central banks kind of following suit. So they're also trying to taper. They're also trying to increase their interest rates and kind of moving towards that direction. So we're seeing the markets kind of pricing that in at the moment. So this is going to be very important because you want to understand what's happening with the Fed and what's kind of the sentiment around all central banks, right? So the Federal Reserve officials said that they want to avoid unnecessarily disrupting the US economy as they prepare to start raising interest rates, showing little stomach for an aggressive 50 basis point move in March. So right now, for the most part, what the markets have been trying to price in is a 25 basis point move, which is small increments, right? But then also, we saw some fundamentals coming out in the past couple of weeks that if the US economy, or let's say global economy, is not doing very well, and you increase that 25 basis point, but is that really enough in order to combat the inflation, in order to combat all the other issues that are economic issues that are going on, right? So now they started putting at this little potential window that, hey, maybe we're going to have to come in with an aggressive approach, a 50 basis point move. But right now what this article is pretty much saying is that they're showing little stomach for it, so there's not much anticipation for it, or there's not much decision being made around the 50 basis point move. Maybe they're going to come into those 25 basis point moves, small increments. And then we are expecting a lot of interest rate hikes anyways this year. About 4 to 5 interest rate hikes are projected for this year when it comes to the Fed. So last week, Chair Powell declared that officials were ready to raise rates at their next meeting to curb the strongest inflation in 4 decades, but he declined to give specific guidance on the policy path. So right now, you're still kind of in this accommodative stance, but now you're slowly moving into the contractionary monetary policies, which pretty much starts off with tapering, and then they move into increased interest rates. And what you do in a contractionary monetary policy is pretty much you're taking money out of the economy, and then because your economy is strong enough to kind of stand on its own, and then you're headed towards the dual mandate, which most of you guys might know, and it's the price stability and also, a maximum employment. So that's kind of what we're headed towards right now. That's what the goal is. So going into the next couple of weeks, as you're looking at any pair that whether it's Euro, GBP, US, JPY, this is usually the same mandate that a lot of these central banks have. You should be looking at consumer data. You should be looking at labor data. You should be looking at inflation data as well. Let's continue down. So pretty much same thing that I summed up right here, that Powell went out of his way to indicate that the officials had not made up their mind on Monday. And right now we're kind of just headed towards this anticipation of we're going to go with the small increments of 25 basis points. So this is the same sentiment that has been pushed around into other central banks as well. As you go further down in this article, you're going to continue seeing details about this, but that was pretty much the summary. So that's what we're anticipating from a lot of different central banks, from Bank of Japan. China is the only one that's kind of going in the opposite direction. They're actually decreasing interest rates. A lot of other central banks are increasing their interest rates, but China's the only one that's kind of going in the opposite direction.
Similar to Japan a little bit.
Yeah, so Japan's kind of keeping it the same. They're not decreasing it. They're already in negatives, but they all have the same mandates pretty much. There might be a little bit of changes here and there, but for the most part, every central bank targets price stability, which is inflation, right? You want to have inflation at a good amount of level, which is 2%, is what the consensus has been, and then also maximum employment.
Absolutely.
So that was from. What was that?
What do you think that what like the Fed should do right now and like the coming year? Real quick, like what would you say that we should increase 50 basis points at a time, like 4 times this year? Should we do 25?
I would say go with small increments because right now you still have to get the data, right? So it's only been the first month of the year. So we're still trying to catch up on the data from December and even November, right? And then obviously new variants keep coming out. But at this point, a lot of people are kind of overlooking that. So you're not seeing as much fear as we were seeing in 2020, right? When the new variants first started coming out. But I think small increments test out how the economy is reacting to it, because obviously in the past year, when you've had those low interest rates, a lot of people really went out their way and they started doing purchases that they cannot afford, right? Even though this situation is slightly different from the last recession that we had, the consumer behavior doesn't really change much. People still go out their way and they try to buy things. So they go out and they try to buy things that they can't afford. And that's the same exact thing that's happening right now. So there are people who could afford these things, but obviously there are people who can't afford it and they really went out their way. Even like housing markets and all that type of stuff, you're sitting at peak levels that we haven't been at before.
Absolutely.
So that's for the central banks. Now going into some more of the geopolitical side. So you have the UK, for example. We're going to start off with the UK and then we're going to go ahead and move on to Russia and Ukraine. So Johnson has been put on notice after UK report slams leadership failure. So if you guys haven't been following this, and this has kind of been in the background as well, and what's going on here is pretty much in December, a lot of people in the UK were told to kind of practice social distancing and all that type of stuff. So as the government is saying this, there's a party that goes down, right? It's a government party that goes down, and everybody who's there, especially UK Prime Minister Boris Johnson, gets pulled right into it. And so that's the criticism that's coming into play. And that's where this a bit of leadership shakiness is coming in. So from the UK side, there's a couple of different sentiments that we have been seeing in the past couple of weeks. And that's that, well, usually when you look at any country and a leadership is, shaky a little bit, not a lot of people have confidence in it, that also translates into investor confidence. But another sentiment that we have been getting for the most part is that, well, if Boris Johnson gets out of office, a lot of the country is going to take it as an optimism. And they're actually going to look at, well, who's the next person who's going to come in and take the seat? And they want to take a look at where the policies and where the ways that they will be handling COVID, and that the way that they will be handling, economic growth and all that type of stuff. So right now we have conflicting sentiment, as you would have with any government. Anytime there's an election going on, there's always going to be conflicting, but you want to be taking a look at how's the market really reacting to it. So at the moment, when you're looking at GBP pairs, you're not seeing GBP really failing to the levels that you would have otherwise, with a news like this. So right now, it's safe to say, with everything else that's kind of going on, that the markets are not exactly paying too much attention to this particular news. But this is still something that you should be aware of and not completely ignore. So this is something that I personally have been following in the background, a little by little, but also there are other things on your priority list, which is the central banks. So that's going to be very important. And then obviously, following along with the data points that are coming out, along with any geopolitical news. So this is something that you guys want to watch out for. So right now, he's still under pressure, and that's pretty much the summary of this article. As you continue down, you're going to continue to see some more details about this. So he's losing support clearly, and then as you continue down, it gives you the rest of the details.
I think GJ and any kind of Great Britain pair not having too much effect. I think that says a lot about Boris Johnson too.
Mm-hmm.
But I personally love seeing this. I love seeing when politicians are held to, the standard that they set out for a lot of people, because as you guys know, we've been seeing that a lot, unfortunately, in the US, where a lot of politicians are setting forth rules and then not following them. So as a citizen, I like seeing them being held accountable. And this is actually, doing some damage. Like it looks like he may be, on his way out because of this. This should be happening more and more. We need to hold our politicians accountable because we're voting for them and we pay their salary and all that stuff. So that they work for us. And it's good to see that he's being held accountable now.
Yeah. And the reason why we're bringing this up right now, like in this weekly outlook, is because you want to pay attention to, well, what are the policies of the next person who's going to be coming in? What are the potential policies that you can see coming in? And how would that affect your pair? How would that affect the GBP? How would that affect the entire economy of United Kingdom? Mm-hmm. And then now going on to the last part of the geopolitics, and then we're going to go ahead and move on to the economic calendar, is the US-UK ready sanctions on Russian oligarchs. So
are those real?
What was that?
Are those real AK-47s? They look like toys.
I can't even tell. I'm going to be honest with you. Oh, they learned how to handle a firearm during training.
Oh, okay. There we go. That's why you got to read, guys.
Yep. So what's going on here is obviously, we have those political tensions between the Ukraine and Russia, and then you have U.S. stepping in. Like I mentioned earlier, quick summary again, is the U.S. stepped in and they told Russia that, hey, if we're going to go ahead and move forward with this, then we're actually going to end up placing personal sanctions on Russia's president. Right. So that's what that's pretty much what's going on right now. So they're still kind of moving. There's still kind of like this tension between the two. We haven't gotten too many key developments so far when it comes to specifically the Russia and Ukraine conflict. But right now we see that a lot of countries are coming and they're sitting on the sidelines, especially the major ones like the US and UK, which are saying that they would include sanctions on oligarchs close to the president. Mm-hmm. As you continue down, you'll see some more details about this. So Putin and Macron talks of moves to lessen tensions, US-UK ready sanctions on Russian elites. And then as you continue down, you'll see a little bit of more updates. But the key point is now you're starting to see some of the big players coming into the picture, and they're sitting on the sidelines waiting for some more key developments.
Yeah, this is something that, like, I don't think anything is going to happen from this, but at the same time, it's something that you should definitely pay attention to, because one thing leads to another, and this could end up being pretty messy when it comes to like world being at war. You'll see oil tank, you'll see gold rise, you'll see all these different things happening if we go into war. And I don't think it's just from this happening. I think if this happens, if Russia decides to invade Ukraine, you're going to possibly see China invade Taiwan. And those two things happening at the same time are really going to affect the United States, because the United States have both countries, they have both their backs pretty much. And they're saying that they have their backs. So we'll see what ends up happening if that happens at the same time, because you could be looking at a possible world war. I don't want to, go crazy, but it could happen. So it's just something to pay attention to.
Yeah, just more tensions pretty much building up, right? And that's something that you want to pay attention to. So we're going to move on to the technical side shortly, and that's where we're going to discuss all of this. But what you are going to see, most of the pairs are sitting at key levels, those monthly levels, those weekly levels, and things like that. And you are seeing fundamentals coming out. So whenever you hit those key levels on the technical side, you will always see supporting fundamentals coming out that will help you move in one direction or another, whether it's to break through a resistance, whether it's to break through a support, doesn't matter. But that's why you need to be paying attention to some of these fundamentals. You don't need to be an economist. You don't need to be an analyst. You don't need to know 100%. Just understand what's happening in the world.
Yep. Have an idea.
Yep. And then quickly, just to go over the economic calendar. So we started off the week pretty easy, right? So not too much coming out even today. The only thing that's really kicking off this week with the interest rates is going to be the Australian RBA rate statement right there coming out. So pay attention to the interest rates, of course, but you also want to pay attention to what they are saying in the statement, because that's going to give you the outlook of the economy. It's going to let you understand, what's happening right now. And in different situations, how they will be handling and what's their outlook like for the rest of the year, right? And then usually there's a press conference that follows up. It doesn't happen with every single central bank, but for most central banks, there's usually a press conference that follows up. And so you want to be paying the most attention to that, because they will be asked questions about different scenarios and how they plan on handling those situations. So today in Asian session, you're going to have RBA coming out, RBA rate statement, and then after that, a pretty easy pre-London session. And then going into London session, you have a ton of euro news coming out. So if you're trading, any euro pairs, this is what you want to be paying attention to. You're probably going to see some good movements on the 15-minute, 30-minute timeframes around this time as the market's trying to price in these fundamentals. And then going into towards the middle of the London session, you have some GBP data coming out. And then after that, it calms down a little bit until New York session. So right at New York open, you really don't have much coming out that will be moving the markets, right? And then about 2 hours into New York open and an hour into the New York Stock Exchange open is where you have the JOLTS job openings. So everything before this, it's all going to be purely technical moves, right? Between the GBP data coming out and then the USD news coming out. And then right after that, you have, again, fundamental supported moves coming out. So you want to pay attention to ISM manufacturing PMI and the JOLTS job openings. This is NFP week, so you are already starting to see some labor market data coming out, right? So this is something that you want to start paying attention to. Any labor news that's coming out of the US this week, you want to be paying attention to, because that will help you understand what can you expect for NFP on Friday. And then after that, you have the unemployment rate coming out from New Zealand, and then the market pretty much, dies down from that point when it comes to the fundamentals. And then you have a bank holiday still in Asian session, starting from Sunday, even today. So Sunday, today, even tomorrow, and Wednesday, you have the bank holiday from China, all of Asian session. So I do expect Asian session to be a little bit slower this week. And then going into Wednesday, so as you can see, not much coming out in pre-London or even London session. So you just have some CPI data coming out for Euro, but that's about it. And then you have OPEC meetings coming out. So this is where you want to be paying a little bit more attention to the fundamentals. This is where you want to be paying a little bit more attention to, what's happening in these OPEC meetings, especially if you're trading USD CAD or oil. Right? So this is something that you really want to pay attention to. And then you have ADP non-farm employment change. This is very, very important going into NFP, right? Because this is going to be using pretty much the same exact data that the data from NFP is coming from, right? So this is something that you want to pay really close attention to. Actually start back testing this as much as you can this week, leading to NFP. So go back, every month when you see ADP non-farm employment change coming out, try to look at how the market reacts to that, and then take a look at how does the market react to NFP on Fridays. So go back and collect that data as much as you can and prepare yourself for NFP. After that, you have Bank of Canada's governor speaking, but again, pretty easy day. And then Thursday is when it really starts to pick up. So expect the Asian market to slow down on Wednesday. And then on Thursday, you have a ton of PMI data coming out. But right before New York session opens up, an hour before, legit, you have the interest rates coming out and all these fundamentals coming out as well. You really, really want to pay attention to the monetary policy report. And then you also want to pay attention to the monetary policy summary as well. So obviously the interest rates will be coming out. We are expecting another hike from them. And then most importantly, so this is what you're going to pay attention to right when the interest rates come out. Most importantly, 30 minutes later, you have Governor Bailey speaking. This is what you really want to pay attention to as well. This is going to help you understand what's the outlook like when it comes to the UK. Why did we increase the interest rates at that time, or why we didn't increase the interest rate at that time? He will be asked about those kind of things. And then you have interest rates from the euro coming out as well. So expect slow sessions until these news come out. This is very important for the market, right? And then after that, the most important data is going to be the ECB press conference right when New York opens up. And then you have ISM services PMI. So we just had manufacturing PMI coming out earlier in the week. And then you guys want to right here on Tuesday, so tomorrow. And then on Thursday, we're going to have the services PMI coming out. Then you're ready for NFP, right? So pay attention to unemployment claims, pay attention to challenger job cuts, pay attention to ADP non-farm that comes out, the JOLTS job openings. All of that's going to prepare you for Friday NFP. So that's the economic breakdown right there. And then we're going to go ahead and move on to the technical side with Stefanos.
Let's do it. What's up, guys? Let's break down the charts over here. So as you guys know, again, if you guys are new with us, we normally just do our fundamental breakdown, then we start with a technical breakdown, checking out GJ and gold. And what I have here is a little skeleton of the higher time frames. As you guys know, we've been in this multi-year downtrend, which it looks like we're starting to break over here as we're in this market recovery from COVID. Right, we've been in this bullish trend ever since, pushing up. Now we're stuck in this higher time frame range. Once reaching 156, coming down to 149 to retap into it. Previous candle body highs, also resistance over here. Key area holding support over here. We get this spike up from sentiment that the Bank of England was going to increase rates. They didn't increase rates, so we come right back down to 149, right? Then what happens? They actually have a surprise move in December because they said in November, since we're not increasing rates now, we're probably going to do so in March. But what did they do? In December, they ended up increasing rates, and that's where you got that bounce off 149, as well as the key level of the bullish trend since COVID. Key level here meeting up, we had that bullish move all the way back up to 158 to tap into 158. But as you guys see, beginning of the year, this is the first month of the year, January candle pushed all the way up here and then rejected 156 over here, and now we're below it, right? So are we going to stay below it? Probably, right? Because it's the last day of the month. So where is this monthly candle going to go? Is it going to retrace more back up to 156? Is it going to push lower? Moving into, actually, I mean, the day's almost over. So it's pretty much going to close the way it is right now. So let's go down to the weekly over here and see where we are heading. We're also starting to reject this area over here. Candle body highs, 154, 900.
Before you drop down to the weekly, real quick, guys, pay attention to the fact that you're in that downtrend and now you're tapping into those key levels. Are we going to break above that downtrend? You know, we did just close right above this entire push up, right? So that's the next thing that you guys should be asking yourself going into the next monthly candle. Obviously, this candle is going to close in about a minute. There's no way that the next candle is just going to shoot up, right? But what are the potential moves that you should be watching out for?
100%. Looking at the weekly now, as you guys know, we have this resistance up here, 158. Price we've been respecting multiple times over here. So we'll draw that. Now, what we had here, when it comes down to breaking the candle body anatomy, I know we have a couple students in our groups that were having some issues breaking down candles going down to the lower time frames, right? So as you see, we ended up rejecting 156 or 158 again. This candle ended up creating this top wick, flipping bearish, passing the low of that candle, closed a very strong candle, but with barely a bottom wick over here. So in the lower time frames, when we see that, price could go 50-50. It could drop, or most of the time it continues right back up, or pushes down a little bit and then rejects, just like it is right over here. So moving this out of the way, we now have a support in this area that we can now start marking off, but we're probably going to end up adjusting that as we go down the time frames. But you have a bullish candle right here closing right after this one, right? This candle ended up passing the high of that candle right over there, but no bottom wick. So where's this candle going to end up? Remember, it's the beginning of the week. So we got to see if this candle is now going to reject this area and continue bearish based on probably what's going to happen. What is it, Wednesday or Thursday that they have their monetary policy?
Thursday, I believe.
Thursday. Okay. So I think the 3rd of February. So we're going to see if price is going to hold support here and continue bullish to retest 158 after possibly increasing rates, just like what we had right over here. That's where you backtest NFP, or not NFP, but you backtest interest rates, right? Backtest monetary policy statements and see what they end up doing and what ends up happening in the chart. So are we going to hold support here and continue up, or are they not going to increase rates and not do anything, and we continue back below this support and continue through?
So what I personally started doing around these time frames is marking off where's the current top wick, and then where's price, or what's the bottom wick, or things like that, and where can the candle flip bearish, right? And then continue back down. So that's what I personally, so that's what I personally mark off, because now when I drop down to lower time frames, daily time frame, 4-hour time frame, 1 hour, 30-minute, whatever. Now I know that that's my range that I'm looking at for potential trade opportunities this week.
100%. So obviously, like that, the high and the low of the candle, it's Monday. The high and the low of the candle is going to be that first daily candle, right? So if you guys are trying to break down the time frames, that's where you get that first weekly candle over here is the daily, basically. So now we're starting a new day. 5 o'clock just happened on the East Coast. So where are we going to end up going from here? I'm going to erase that. We're going to look at this support that we've been holding over here, previous resistance. Right, price bouncing off this area over here, right, holding support. This is also the 50 EMA on the daily. This is the 200 EMA on the daily. So we're holding support over here, and now this is the 10 EMA. We just closed above with a possible wick to fill. So I could see us staying in this area over here, right, not doing too much until Thursday happening. That's why I always say I have like a love-hate thing when it comes to interest rates, because you're waiting all week for the move to happen. Maybe nothing happens. All of a sudden, you just lose a whole week. So that's what we're looking at over here. You have this previous support. Now price keeps rejecting, just rejected 2 days in a row over here. So we'll see if it's going to hold that area and continue down, or we're going to start pushing up.
Yep. So another thing, like while you're doing that, Stefanos, real quick, is that when I'm looking at price like this, or when I'm doing like back testing or anything like that, I'm looking at this level. I'm thinking, okay, well, clearly this is a daily time frame. This was a strong resistance area, right? So 1, 2, 3, 4 candles rejected this, and then finally we had a downtrend right there. And then again, you had a nice little break and retest resistance, and then a push up right there. And then you had another break and retest right here with about 1, 2, 3, 4 candles closing right below that. So now what are some potential moves in this current daily candle that we could see? We're going to drop down to the 4-hour 30-minute. I'm going to have Stefanos do all, like, break that down for you guys without interfering too much. But the way that I start thinking about it now, going from the daily time frame after I've marked off, like, some of these key areas, is that can we potentially see a pullback somewhere here and then a push back up, given the previous daily candle started with no bottom wick, right? So always looking at that basic, pullback and continuation up as we're breaking above some of these key areas.
Yeah, and just to piggyback off of what Sharma just said, like, you're following the trend that we're in too. So since tapping into 158 up here, we have been in this downtrend, respecting the downtrend, printing lower lows and lower highs. We just printed a new low over here, and now we're in a key area. Previous support, you'll see it on the lower time frames. You can actually probably bring this over here. That's all you really need to do to know it's a key level. It's the daily time frame. It's not like it's a 30-minute. So right now we're meeting up with a key level over here. Are we going to react to here to continue down and retest the low? Or are we going to retest this area, like Sharma said, create that bottom wick, and then break through this bullish trend, possibly on Thursday, maybe Wednesday, and continue through here, pricing that increase in back up to 158. Now looking at the 4-hour, we're just going to adjust this. And there you go. You got lower lows, lower highs being formed over here. Price ended up breaking the bullish structure, forming this double top, triple top, whatever you want to call it, and price is now coming right back down to retest this low over here. So looking now, since creating this low, we've been in this little bullish trend over here, right? So for me, I'm going to mark this level off right over here, previous support. I don't want to take any sells, really. I mean, you're going to have safer sells once we break this level over here, possibly even this level right here. You'll have safer sells, right? Because it looks like we just got a little fake out up here after this resistance was formed. We get this fake out, price is right back into this range, printing lower lows on these current 4-hour candles. I'll show you the market break, the structure of the market, the previous bullish trend we were just in, since bouncing off of here, we're now coming back into this area. So are we going to hold support to continue up? Are we going to break here to continue down here to hold support, and then we continue up and like range until then and continue up? Or do we break through here after not increasing rates and continue down to this low and continue even further past 153? This is currently a setup that I like. Normally this candle has a top wick, but you have this strong bearish candle, weak bullish candle. This candle creates a top wick, pass below that candle, and we just drop, filling that wick and continuing down. But we got to see what's going on the lower time frames.
For your drop down real quick, I think it's going to be helpful for those who are learning how to narrow down the price action is, can you just draw like a quick zone like right below this right here coming all
Right
the way?
here. Yep.
Yeah. So if you're learning how to like, draw zones or narrow into the price action, like this is one way that I like to do it, where it's the current 4-hour candle, for example, is making that little bottom wick right here. And then it's also creating a support right into this area. So now if price breaks down at the very minimum, it's probably going to come back and try to fill this wick, right? But once price breaks below that, then you have obviously much better sell opportunities coming down. But again, that could be the restriction of your trade, right? Limitation of your trade of how far it might end up running.
Absolutely. Yeah. And as you guys see, we're in this bullish trend over here. But if you look down at the 1 hour, the 30-minute, we were just in this bullish trend last week, or actually opening up this morning or yesterday morning. So Sunday morning opening up, we've been in this bullish trend. Now, all of a sudden, we just break structure over here with a strong bearish candle, come up to retest this area, close another strong bearish candle, forming this lower low or lower high over here. I hate drawing this many trend lines, but just so you guys could see how we just switched everything and how the market structure switched. We get this fake out bouncing off this key level over here. So what's going to happen over here? I would actually adjust this right here. I think you may be able to get some sells if you break and retest this level to continue right back down over here to this level over here. But remember, you're in this bullish trend, and this is only a minor bearish trend coming back to this key area. We, central banks, we're all thinking that they're going to increase rates. So I wouldn't be surprised if we hold support and continue up from here. And this is just that liquidity grab before heading back up above this level.
Or even just fill that little bottom wick that we have. Yeah. And then push right back up. That's a tested structure.
Exactly. So with this, you got a pretty solid move, but at the same time, you have this area right over here that you want to be aware of. And this is the 1 hour. It's not like this is the 15 or the 5-minute. This is definitely a key area. That's why I would say wait for that retest right here before trying to take this thing down, not just an impulse entry after closing here, because we could reject this area and continue right back up.
And that's pretty close to that wick fill. So, just pay attention to that, going from like higher time frames down to lower time frames.
Absolutely. So, I mean, if you do wait for this candle to close below, make sure that you're securing most of that position once you fill that wick, knowing that the sentiment is basically bullish right now. Yeah. Right now, we're rejecting this area. We're really in a consolidation over here, messy price action. I would wait for price to clear out of this area to possibly take this sell back down to 154.200, or just don't trade in here and wait for price to break out of it. Wait for price to break out of 155, 200, right? So that we can continue up. Like this might be safer buys for you. Let's get rid of all this because it's probably confusing to you.
Just the lines and zones everywhere.
I know, I hate that, even though I'm doing it. So you have this little level right over here that we broke above, right? And now we're right back into this area, but we are respecting this bullish trend right now. All right, so we could, like I said, we could come down into this key area over here, hold support, and then continue right back up, or continue to consolidate in here. So just be aware of some of the areas that you're trading in. Wait for break and retest, stuff like that. You may get a lot of consolidation until Thursday. Moving into gold over here, same thing. We got the skeleton drawn out. We got 1830 marked off. You guys know that level if you've been trading gold. You also know 1780 right down here, this previous support. You also have this area 1760, 1750 down here, but we don't have to worry about that too much right now until we break 1780. Right, so right now we're really just sitting in this consolidation over here, and until we break out, we don't know where price is going to go yet. Now, with the sentiment of interest rates probably increasing, right, you could see gold continuing down after bouncing off this trend line once more over here, third time over here. Now we're right back into this range. Or we're going to continue right back down. This is a big week for gold because depending on what Australia does. Is New Zealand up for interest rates?
New Zealand's coming out too. Yeah.
Okay, so Australia, New Zealand, you have I think Canada and Great Britain this week.
Not Canada. Not okay. Canada. So you have Australia, and then you also have New Zealand unemployment rate coming out, not the interest rate. Got it. And then Bank of Canada governor speaking, so not their interest rates either, but GBP and Euro coming out.
Well, with a major bank like the Bank of England, a lot of other banks basically piggyback off of them as well a little bit. So you'll see a lot of movement with gold, especially if Great Britain increases the rates. So as you see, the previous week over here, we just had a strong bearish candle after tapping off this area, this key area over here. Now we're right back into this range, strong bearish candle. Are we now retesting this area to continue right back down? That's the question. So we're going to mark this up like Sharma likes. Put that there.
There you go.
Put that there. So now we know what the weekly range is. So now we're starting to tap off this key area over here. 1785. If you guys remember, we were playing around here for quite some time. Previous support, resistance of this consolidation, and now we've been bouncing off this area ever since. So right over here, you get a bullish move. Right over here, you get a bullish move since hitting that area. And right now, what could we possibly get? Right? Could we get a move back up to here where you get something like this? Right? By Thursday, possibly happening, something like that. So that could possibly happen. But as you see, we're forming a higher low over here. And now this candle did pass the high of that candle. So I could definitely expect a nice bearish bottom wick over here, this candle flipping bullish and continuing up to grab liquidity in this area like Sharma's marking off before Wednesday, Thursday, some of this data coming. We got a lot of stats coming out this week, which you guys want to pay attention to. And if you have free time, definitely backtest some of these events.
100%. And this is around the same time, December 16 is when the last GBP interest rates came out. Right. So that's pretty much when price tapped into this area here again and then pulled right back down and came back.
100%.
Right. So I think is this December 16 right here? And then it pushed back down.
This is 17. Yep.
17. Yeah. So pretty much around that time, price, tapped into the same exact area here and then came right back down. Sorry, not straight lines, but pretty much you get the point.
It's a great point. Also rejected over here too. Right over here, support.
Yep.
So good area to look at. All right, now we're looking at our range, right? So typically, if you want to take an intraday or a swing trade, you want to wait for price to break out of this range. Same thing with the lower time frames when it comes to scalping. So where's our next area? Right over here, 1809, which is very similar to our whole area right over here. We can actually mark this off as a big zone until we get into that area as the lower time frames start to get in. So let's see. All right, so we're holding support, same exact place we were right over here, right? So can we expect similar movement, just like we were talking about over here? Now, we keep rejecting 1799, 1800 right over here. So obviously a psychological number, a number you definitely want to mark off over here. Will price break that level, right? Will we hold support right here as well?
That 1800 level is also a strong level from the monthly time frame and down.
100%. 1800 and 1830 are two different numbers. And 1800 is one level that we've been rejecting to stay above or below for the past couple of months now. So it's just something that, again, psychological number you definitely want to pay attention to. Looking at the 1 hour, as you guys can now see, we are rejecting this level once more, right? Strong bearish candle. We are still in this little bullish trend that we've been in, right? So could we just be coming down back to this support, previous resistance? Could we be coming down into that level, holding support in this area, and then continuing up and breaking 1800 to continue back up to this area and then continue back down? Let's see. Yeah. We're not going to mess with too many trend lines on this. I don't see any valid ones. We're just going to look at levels here, which is more important anyway. Looking at the 30-minute, as you guys can now see, we do have a no trade range that you guys want to stay out of, right? Wait for price to break each level. I think safer sells are going to be below 1792, 300, right? Once we start to break this market structure, we broke this area over here. You do have a clean move, but we could very well, you would want to wait for a break and retest in this area before taking this thing down. But you'll have safer sells here and even safer below 1785, 1786. Back above this level is where you really want to see something happen. So far you got that level and you got a clean move right back up to it. Got about 600 pips over here that you guys could be mirroring. And
That's 60 pips.
What was that?
I think that's 60 pips, no?
600 pipettes, whatever.
Oh, okay.
Yeah,
Sure.
you're right. So you got about 60 pips in here that you could be bringing price back up to this level. Let me see it on the 15-minute. 15-minute, possibly into here. So you got about 65 pips right there that you guys could be mirroring. Clean move, right?
So wait for clear level breaks, clear zone breaks, right? And then understand, for example, here, we're not saying that you can't take a trade here, right? Yeah. Right after price breaks below the zone. You can definitely take a trade down here, but you need to wait for your confirmations to the downside, right? Actually, real quick, down here. Anything in between, you really shouldn't be trading in consolidation, but also understand that when you're taking this trade coming down, there's a very high chance price just simply is correcting this entire bullish move up to the upside and pushes right back up, right? And then we go up to those key levels that we discussed from higher time frames. Yeah. So you can 100% take trades here, but understand that if you're someone who struggles with, a greed problem, a lot of people are able to identify that for themselves, then maybe this is not the trade for you. Then you just wait for that 1792 level to break and then continue down, right? But if you're someone who doesn't really have that greed problem or anything like that, then I think this is still a valid sell coming all the way down to 1792.
100%. So with that, guys, I hope you guys have a great week. I'll see you Wednesday, 6:45 Eastern Standard Time. Be trading with you guys again. We got a nice trade last week, so hopefully we can get another one for you guys. But have a great week. Have a smart week, disciplined week, and get the most out of yourself this week, all right? So it's the beginning of the year. First month is already over. You guys all had your New Year's resolutions and all that. Hopefully they're not over yet. So just get more out of yourself this week. Demand more out of yourself and raise your standards this week so that you're proud of yourself by the end of the week. By Friday, by Saturday, you know that you put as much work as you possibly could in. It's going to make you feel good about yourself, I promise.
100%. And then just to kind of piggyback off of that, a lot of you guys may have watched our first video that we dropped for this year for Secrets of Trading, how to identify your goals and all that type of stuff. So we talked about how you should take a quarterly approach. That first month is already done for this quarter. Right now you have 2 more months left. So if you already messed up in the first month, this is your time to kind of get back on your feet. And I expect a lot of people to mess up on their first month anyways, right? But this is your time to get back on your feet and then start hitting those goals again. If you guys need, any help or have any questions or anything like that related to trading, related to anything outside of trading, even, feel free to reach out to either of us, and we'll be more than happy to help you out. Hop onto a call or whatever. Take advantage when people are offering you help for free.
Doesn't have to do often, but we're glad to do it. So just take advantage of it and make sure you come into it with the right attitude. But I think Sharma hit the nail on the head, and wish you guys have a good week, and get this about it.
Yep.
All right, guys. Awesome. I could just cut that.